So Spotify just published their Q2 earnings report, and
Ooh, it's exciting.
yes, it is. It's actually big news, big numbers too. They've posted a 20% year over year increase in revenue for the quarter,
20.
reaching record breaking profits, 300 million, 288 million to be exact. Um, they've pushed a 14% year over year growth in total active monthly listeners, now crossing the 600 million threshold, which is quite outrageous
Wait,
if
can
you
you
really
repeat that
think
one
about
again?
it.
A 14% increase in.
Year over year, total monthly active listeners.
Wow.
So they have 626 million active listeners on the platform now. The premium subscriber base also increased by 12%, and they shattered the earnings per share expectation. The analyst consensus was $1.14 per share, and they came in at $1.43, which absolutely crushed it. And I think these numbers took people by surprise, especially seeing how they took the gross margin percentage up by 30% as well.
Yeah.
Spotify just absolutely hammered the numbers.
It's super impressive. I think one of the things that I think is sleeper in those numbers that you just brought out then, the 14% active listener numbers, to have that increase, I don't think that that is because people are more in love with music. I think that's because podcasts have been included. There's a whole lot of other reasons why people are active on the platform. And I would love to know what the increase in streaming of music has been since Joe Rogan was paid millions and millions of dollars and Call Her Daddy was paid millions and millions of dollars to adopt mass listenership on the platform. And I just
Mm-hmm.
wonder if like time on site going from 10 minutes a day listening to music to 3 hours and 30 minutes a day listening to podcasts and music, I'd love to know what that looks like. You know,
Yeah,
like that's super
absolutely.
interesting to me. You know,
Yeah, I think that's a double-edged sword in some regards because Rogan, his new, he just signed a new few $100
yeah,
million deal with Spotify again,
non
which show
exclusive.
not exclusive,
Yeah.
which is the key to what I was about to bring
Oh,
up,
yeah.
is
Sorry, I
because a
stepped on your
majority,
shit.
no, no, you're good. A majority of his audience resides on YouTube and other
Yeah.
platforms. And I think it's just one of those things that habitually a lot of his audience is so used to going to a certain place for it
Yeah.
that Spotify now participates in that earnings participation for him across these other platforms, and it just opens up the web for how they entangle these listeners.
Yeah.
So I would actually love to know that data as well myself because I think it's a little bit of a double-edged sword there. I don't think it was. I think it was effective in maybe recruiting people to the platform. I don't know if it was essentially as effective of keeping them on the platform.
I think the like I look at Joe Rogan as like a gateway drug, right?
Yeah,
He
yeah,
he he brings you in and then you go and find other podcasts elsewhere and he brings
yeah,
guests on that have their own podcast. They hear like he's like a TV station. You
yeah,
know, he puts like a programming show on. You like that person for the 3 hours you saw them, which effectively is like a movie, like a long
yeah.
movie.
It's Avatar.
And I think that's why I think that's why YouTube will always be dominant for him is because no one listens to the whole episode. It's very difficult to listen to 3 hours and 4 hours of two people talking to each other. But
Yeah.
you take the clips out of that and run it up. Spotify will never run that. Well, they're actually probably going to integrate some form of feed structure of a short form content. That would be make a lot of sense if I was them, which also leads to something else that's very, very interesting about Spotify at the moment. I saw a new business worldwide, the music business worldwide the other day. Spotify is dropping 130,000 square feet of office
Wow.
space, and not
Wow.
just dropping it, they're subleasing it to StubHub.
Wow. That's a
Now,
plot twist.
I, as much as I think that's just a organic partnership, it definitely, I've always felt that Spotify needs to start integrating itself in building community.
Hmm.
And live ticketing is very nice community.
Yeah, absolutely.
You know, like if I was Spotify, I'd go and buy StubHub and I'd go and buy um, some community platform that allows gateway ticketed content that's paywalled or something, and I'd run it all on platform.
Yeah,
Right? It's the best way to garner more income, you know?
100%.
And it would allow you to diversify your revenue essentially, and you could take clips of cash off the ticket pricing and also off the subscription of any content generated. So I don't know if that's the beginning of something or what that is, but that doesn't feel accidental.
Not at all. That 100,000 square feet of retail space is a lot of office space.
Yeah.
That's not a small piece of the pie. I'm sure that's actually a pretty good percentage, a noticeable percentage of their actual office space that they possess. And it only makes sense. We've seen the integration of Spotify is like the Instagram of the DSP space, where Instagram takes the good ideas from other platforms and implements it for themselves, whether it's stories that came from their Snapchat inspiration or where Instagram takes these other little bites from and then does it better, right? They're like the Apple of the space in that regard. They know when the market is ready for it. They understand their consumer habits and they recognize when and where to implement those strategies. Spotify, we've seen the integration of how they've moved with the artist tab in portals for where they're performing. We know that that helps drive algorithm push when they recognize that artists have performances coming up. You know this better than anyone.
Mm-hmm.
And it only makes sense that that would be the next step. On our very first episode, we touched on the fact that we thought Spotify was trying to position themselves as this like fusion label distribution basis of sorts for the next generation. I think it's only a matter of time before the full scale integration arrives across direct song upload, ticket sales. You can already sell merchandise on the platform. Now they have their countdown feature, which I believe went live this week. They were teasing a couple of our artists over the last couple of months, where now the forever pre-save strategy, a la Symphony, companies like Symphony, right? Where you could do the forever pre-save, where you save one time for the artist before the song comes out. You're locked in with their catalog forever, which was a brilliant approach. Spotify's, let me take that from you real quick. Integrating all these different strategies and entry points for artists. And I think it's just a matter of time before the iron grasp closes its fists across the whole board. So the StubHub integration is a beast move, in my opinion.
Yeah, as I said, it might just be two really good leasing agents that have figured each other and found each other.
You make a commission, I make a commission.
Exactly, and they've figured this out that way. But to run in with crazy earnings like that, to be an upwards trajectory company, and then to go, you know what, it's downsize.
Yeah.
Like, the numbers should have been opposite for them to be downsizing. So there's a strategic alignment taking place there. That's the only thing that I could grasp. But Spotify is wildly interesting. Like I think
I'm very curious to see how that's going to pan out. Are they going to offer, are they going to do the pre-sale tactic on Countdown, where you save the song, you get early access to tickets? Are the ticket sales going to be a billboard play where they integrate it into the total numbers, like a Travis Scott style move
for
with
listening
tickets
early, and then they give you discounts for tickets for high volumes of streams on an artist in a particular city?
Oh wow!
Like they have so many they have so many data points. The
top 100 listeners get this, get
top
that.
100
they
listeners
know the
get
cities.
This. They know everything. They know everything. So that you get a notification inside of your Spotify app that says, Bridge has just gifted you 2 tickets to whatever because of your loyalty over the years.
Wow.
Random acts of kindness.
Man, with a personalized message attached to it.
With a personalized message,
top
a private video pops up first thing. Like literally as soon as you get in there, an AI generated first name replacement. Hey George, just wanted to hit you up with this ticket. Like there's so many, that's obviously an extreme example of it, but the data that they hold is wild. Like the application of that, I would love to be a part of that project to execute against that volume of data and that corpus of data that you could generate insane levels of personalization.
100%.
It's
Spotify, if you're listening, you can't swoop my co-host, just letting you know.
But like, I also just am so fascinated by the back end data that they hold for artists, like
Hmm.
what they could be doing for artists on making target audiences and customer segmentations for them, because they know the exact archetype, they know the other listeners that they're listening to, they know it. What I'm curious on is how much of Instagram's data they also hold.
Oh yeah,
Because we'll talk about this later on, but there's countless examples of direct implications from other social media platforms having success, and then Spotify following that and looking at popularity scores increase, and we'll dive into that later on. But like, there's just so many examples of the data that they hold, and like, to make a proper valuable Spotify for artists backend, you could charge $20 a month for that to
absolutely,
artists. Like, I'm just
hundred
surprised
percent.
they're not like leveraging that data from a direct to artist standpoint. I'm sure there's like a very corporate board of directors reason as to why that's not taking place, but there's
Yeah,
definitely a very, very interesting angle into that. But yeah,
yeah.
as I said, Spotify is very interesting.
I think once they shift the consensus regarding them from feeling like a monopoly to where people already feel like Spotify is undercutting artist revenue.
Yeah,
They're one of they're one of the largest lobbying companies in regards to trying to cut mechanical royalties for writers and
yeah,
basically pay them less. They understand and control the algorithm. Obviously, they've created it, and you know this as well, that you have to get docked a 30% royalty rate if you want to put your catalog into discovery, which helps enlist new listeners and kind of cast the net a little wider in regards to where your music goes and how it's pushed. So I think once they're able to start shifting the public perception in regards to them just being the big bullies on the block, it would be wise for them to then implement that, essentially a payola strategy. Right now, as it exists, there's companies like Songstats and other great platforms out there, which per artist, they charge you a subscription basis just to keep track of that data, to the
yeah.
tune of $20 a month, I think it is in the US, to track your favorite
Chartmetric is like
artist or track the
99.
songs. Yeah,
Yeah, no.
Chartmetric is about $100 a month. Um, and it's one of those things where the opportunity and opening is definitely there. And I think now that we've seen them turn the corner in regards to actually posting and reporting a profit, it's only a matter of time before they continue to scale that profitability. So
Mm.
definitely something intriguing and something that is 100% on the horizon, in my opinion. It's only a matter of time before Spotify for Artists has a premium section that allows for additional data insights, and it's just a full integration of all these platforms that we're talking about, essentially.
Yeah, I think they just struck. Like, I even saw the other day Daniel Ike actually got up direct to camera and talked on the earnings report. You know,
Yeah, the
he
CEO
talked
of
through it.
Spotify, to clarify.
Yeah,
Yeah.
so ECO Spotify just got up so I think that there's like this extra um care that they take towards talking on earnings reports and talking about profit, and they've always like navigated in this cloak of in profitability, which had
Hmm.
allowed them
Hmm.
to sort of skate by maybe not being all that fair to particular categories of the music industry. But as they start to turn these profits, they're going to have to start providing more value in other places. Or else it's
Absolutely.
just going to get the scales will be turned so heavy. But I also I'm very much a capitalist. Like, you
Yeah.
provide a product with value, no one else has been able to do this as big as them.
Yeah.
Like, beat them. You know,
Yeah.
like, I understand they have some of the deck stacked in their favor, but ultimately, like, they saved the music industry from an inevitable slow and painful death by a thousand cuts, and
Yeah.
now we're sitting here, and the time frame in which they've been in positions of power for is long enough for us to forget what life would have been like without it.
Absolutely. Absolutely.
So as much as I get frustrated with them for doing a lot of things, I also understand why they're doing it. They've got a board of directors like everybody else. They've got a ton of
Hmm.
profit. They've got a shitload of investment that's been stuffed into the company. They've got to answer to a lot of people. So I would not want to be running the company. That's a torturous play and game. But
Hmm.
I
Hmm.
do kind of respect the product that they have made, you know?
Wholeheartedly. I think it's surprising how strong of a market share they were able to actually carve out for themselves. Apple was essentially the first major corporation into the space with iTunes. And the fact that Spotify was still able to beat them on a user base. Now, in the last few calendar years, Apple has they were making a little bit of a dent in regards to making waves with their 3 month free trial that they were doing for Apple Music, and then converting it into a quite affordable family plan, which is originally I believe was $14.99. Now I think it's
Mhm.
$19.99 if I'm not mistaken.
Yeah.
Don't quote me on that exactly,
I can
but
never tell with
Apple
US to
was making
euro
headway.
exchange. So
Yeah, Apple was
yeah,
making
so it's
headway. Then Spotify over the last 5 6 years just became impossible for them to keep up. So the fact that they were able to carve out the market share that they did, comparative to
yeah.
even other DSPs like Tidal and Amazon Music, these are companies, especially companies like Amazon and Apple, that essentially have unlimited R&D and cash flow to be able to try and capitalize. So it's just a testament to the loyalty and fan base that the user base that Spotify has
Mm,
created and the manner in which people consume music on the platform. I think they are the TikTok of the DSPs in regards to being able
yeah.
to deliver what actually is satiable for listeners on the platform. And they've done a hell of a job in doing that. And I think you just have to give credit where credit's due.
100%. And I think to pivot to a company that's kind of had a similar situation, you've got this sort of Apple dominated at the beginning, and they had this super profitable vehicle for distributing MP3 $2 to $5 at a time, and they were doing
Mm-hmm.
what CD stores had to do on with physical sales, and they did that digitally, and that was their sort of moat into taking over that space and transferring a whole decision making to online, and then that created its own set of challenges because it allowed people to
Mm-hmm.
copy that and then give it away for
Mm-hmm.
free, right? And I
Mm-hmm.
think I now look at the AI space, for example, and I look at Google, which has been ahead of the curve on this for so long, and they've created more leverage and tools for this. They should have been number one, but then they'd have to throw away the most profitable company arguably ever created in search.
Mm-hmm.
So
Mm-hmm.
they've been in this challenge where they had such a great vehicle. They're like, do we let this go? And then by the time they get to the stage where they're like, oh crap, we're actually behind now, it's almost like they can't catch up because the branding and
Mm-hmm.
positioning of a chat GPT has taken such a leap forward in a consumer basis that it's kind of a
Mm-hmm.
tough game to play. And then you look at Google, like
Mm-hmm.
search, the earnings report for Google the other day was wild. Like
Mm-hmm.
they're still profitable in the search space. They're still blowing targets out of the water in that world. So like it's much wave and as much talk as there is about AI right now and how ChatGPT is changing the world. Its search volume, it's not even making a dent on Google search
No,
volume. So I'm
no.
very interested to see how that game plays out of like this cat and mouse game of Google trying to hold its revenue stream and
Mm-hmm.
trying to keep things moving forward, but not like give up like give up market share to a new player that can then come over and become the biggest company in the world, just like Google did to everybody else. So it's
Absolutely.
this kind of game of like watching monopolies fight. They all know that
100%.
it's a market share game, and once you hold it, and Google's going through it right now with all these court cases around buying out the dominant of default search engine for Safari, and like that whole game is very very competitive right now. So it's market circumstances can change the way that race plays out. So I'm very interested in that as well, and that sort of game of like old school versus new school.
Yeah, I think there's a huge correlation between the dot com boom of the late 1990s and the early 2000s and where we're at now with the AI boom that we're witnessing. I think these companies came out of the gates with massive valuations, and it's always difficult to predict how these stocks and these company values are actually going to play out. Like IBM and these companies for decades on end have been pegged at the same valuation. They came out the gate storming with 70, $80 billion valuations 25 years later, still in the same place, right? Because
Yeah.
I think when you're on the cusp of mass industry wide innovation, a la the chat GPTs of the world that we're seeing, it's only a matter of time before competition comes along and does something 1% better than how you do it, makes it a little bit more user friendly and easy to integrate. And then you kind of just fall into the wayside. It's one of those bases where, only 4% of stocks since 1926 have driven a majority of the growth. So
Yeah.
for you to try and pinpoint what that's actually going to be and what companies are actually going to be the viable and value ones, it takes a lot of luck. It's either you get an inclination to where you're just a beast, a la someone like Warren Buffett, who just understands market trends and where to put his money, or you recognize that it's a game of luck in a lot of ways too, which is why we always say that you shouldn't reinvent the wheel in how you approach, taking on that side of financial responsibility. But my point to it is that a lot of these companies come out the gates with these massive valuations and then slowly begin to dwindle down because you recognize the kinks in the armor. So OpenAI is a great, great, great example of that, where their earnings reports are far below expectations because it's the bandwidth to run these operations and these prompts is very expensive. They have to pay for the data. They have to pay for the computing. It's one of those things of how do you retain and educate a whole generation of people who may not necessarily even recognize how to integrate the use case for what these platforms are, or recognize how to integrate APIs, like how you have, where you've streamlined a majority of your workflow in life on a genius level comparative to how other people would view it, right? So I think it's one of those things that we have to pay very, very close attention to and just see how this all pans out. I don't think the iron horse of the industry has even been presented yet. I don't think we're even aware of the Apple of the space quite yet, so to say. And I think in the next half decade or so, in the next 3 to 5 years, that iron horse will present itself in the race. And it'll be the aha moment of why we all recognize that it makes sense why they came to the forefront of the industry.
We might be about 2 months off from figuring the answer to that question out, and the answer might be the brand you just referenced.
Yes.
Apple's launching its new iPhone in a couple of months.
Yep.
Um, eh, I don't know if the AI innovation is theirs per se from a software perspective, but they do hardware very well. And how
Very
they
well.
integrate that and the usability of that, if they're just reskinning and reapplying an already powerful ChatGPT 4.0, that's
Mm-hmm.
who knows what that looks like. That might be that
Who
last
knows?
5% that pushes it over the edge and allows for mass adoption. You do
100%.
Siri correctly, and that could be the tipping point. But I think
Yeah.
the other interesting part of this situation is this whole stock market drop and lift that's happened, and I'll let you do a deeper dive into that since you play in that space a little more than I do. But what I found very interesting about that is you've got a company like Nvidia that's been a rock star company. The
Mm-hmm.
CEO of that was out there signing boobies the other day. Like the literally a rock star, could not do anything wrong. Just game face all the way through, golden child. And
Mm-hmm.
the problem is he's got 5 customers.
Mm-hmm.
You know, and when those 5 customers can't find decent use cases to pay for all this compute power because there's not enough financial gain off the back of holding the compute power,
Mm-hmm.
if ChatGPT's biggest value is helping my 10-person entity flourish, that's not enough.
Mm-mm.
Like, you got to change the world with the amount of money being spent on that computing power. So if I'm Nvidia
Absolutely.
right now, I'm going, crap. I have no control over the success or failure of this entity. I'm
Mm-hmm.
providing computing. That's it. So the value of my company is whether or not people can use it properly. Because if there's
Absolutely.
no valuable use case for it, the computing means nothing.
Yeah.
You know, it's like having
Absolutely.
an amazing car, best engine in the world. Oh, we just missed the wheels.
Yeah.
You know, can't go anywhere.
No.
So
Yeah.
I think that was part of like a multitude of factors that contributed towards that drop. But when you got a company that's so heavily reliant on a handful less companies, it's destined for some volatility.
Absolutely. I mean, volatility is a part of the game, right? It's stocks go up, stocks go down. Not to make it so simplified, but it really is that simple of an approach to it. The best piece of advice that I can offer to people is when in doubt, zoom out when you're reading a chart. Because most of the time, when you're compressed into a 24 to 72 hour to 7 day scale and the market's trending down, people panic, right? Entry level, retail level investors, they panic. They'll follow the news cycles. They'll read the headline that the market is crashing, it's doomsday. They sell when the market has retreated a little bit. They cost themselves some profit basis. They lose a little bit of money. And most people get scared into even entering again. To put it into a little bit of a better understanding, last week, about 10 days ago, when the market really started taking a dive, there was over $1.5 billion worth of consumer stocks that were sold. In that same 24-hour basis, private industry purchased $15.5 billion worth of stocks. So when there's blood in the streets, you buy. So my best advice to people is never invest into a stock that you wouldn't purchase if it was down 90%. It's essentially like finding your favorite pair of jeans or your favorite shirt outlet. And if you saw that it was marked down 90%, does that suddenly make it the shirt that you don't want to wear anymore? Or are you going to say, holy shit, I'm about to stock up on 10 of these bad boys because
Yeah.
it fits me, it works for me, I understand the style, I understand the basis, I love it. That is the advice that you have to take away. If you wouldn't purchase a stock when it was down 90%, don't purchase it ever. Otherwise, you're just gambling. Investing is turning impatient money into patient money, recognizing how to navigate the markets, how to read the markets. You have to educate yourself on this basis. The S&P 500 is an index. Let's just look at it as the ETFs that they are, the index funds, the VOO or the SPY. They reflect the S&P 500, which is the conglomerate and basically the top 500 companies that run and hold up the United States economy. If a stock or a company isn't performing well, it gets replaced in the S&P 500, and it's normally a really big deal when a company makes the S&P 500, like Tesla did a few years ago, and it was a very big deal, caused a little bit of a boom and a run. Now, in reflecting the S&P 500 about a couple weeks ago, 10 days ago when I was talking, everybody was referring to how the markets were crashing, the markets were crashing. It essentially just went back to its price point of 2.5 months ago. So that's what I mean when I say when in doubt, zoom out, because year over year on the year, the S&P 500 is still up 16%, meaning that if you had the basis of being able to invest $100,000, you're still up 16 grand on the year, right? And that's before any compound interest from previous years or how long you've been in the market has taken hold. So I think it's just one of those psychological tactics. And when you really recognize who's in control of the media companies, right, and these outlets for where people obtain their information, and you recognize the stronghold that companies like Vanguard and BlackRock have,
Yeah.
they're the ones that control the news cycles and control the market cycles themselves, right? They give themselves better entry points, better price points for where they can come and purchase. And it's one of those things that it's never the doomsday scenario that's ever being sold. If you go back to charts, this is an exercise that I recommend for people. If you go back to charts of the S&P 500, just look this up, Google this. Google S&P 500 charts over the last 50 years. And it's just literally pointing upwards. The trajectory is always going upwards. You're essentially banking and investing on the fact that the US economy is going to continue to grow and sustain itself year over year. So it's quite simple. It's never what you think it is.
Yeah, and I also think that I I'm not going to come at this from a heavy analytical standpoint. I'm going to come at it from a pure mindset standpoint. I think, you know, your point on the media was my biggest takeaway from what you just said. Then I think that
Mm-hmm.
there is so much emphasis on us as younger people being told and trained that when the markets are down, the economy's down,
Mm-hmm.
and those two things are intrinsically tied, and they're just not. You know,
Mm-hmm.
people can struggle and the markets can be flourishing, but people can be struggling, and vice versa. And
Mm-hmm.
I think as
Mm-hmm.
younger people who are out there in the world right now trying to earn enough money to be able to afford a home or live the American dream, so to speak, you want the markets down. That's your
Mm-hmm.
opportunity.
Absolutely.
You know,
100%.
it's hard to get compounding growth when you're existing in always up and to the right. You know,
Of course.
your best times are when things are down. If you are younger, trying to cut into this world and try and cut into this deficit, that you're existing in, you're thinking that your salary increase that's going up by 5% every 2 years is enough to sustain growth. It's not. You're staying
No,
neutral, if not in decline. so, so,
100%.
so you have to find other ways of tricking that system. And from a mindset perspective, you have to stop thinking bad is bad. Bad can also mean
Yes.
good. I used to work with
Yes.
shout out to Adam Horowitz, good friend of mine. He used to vlog. He had a travel channel, and I always applauded him because he, since he was vlogging, he had this mindset that was bad is good. If I miss
Hmm.
my flight, I get content.
Hmm.
If I make my flight, I get to an amazingly beautiful place quicker. But
Hmm.
either way, I get content, you know?
Hmm.
And I've kind of applied that mindset to life in general. Bad things often turn out good, you know? And
Absolutely.
I think I think that the way the economy works for younger people is we've just kind of been brainwashed and trained into thinking the markets are a leading indicator and a dictator of the economy. And there was
Yeah.
a point in time in history where that was true, but I think now in today's landscape, you have so many old fuckers holding all of the
Hmm.
cards to ensure that the markets don't drop because that's not
Hmm.
beneficial for their portfolios. So,
Mm-mm.
you've got to, as a young person, anytime these things take place, you have to figure out how to capitalize on it, and you have to try and find some ways into these scenarios because it's very very difficult. We will bring on a guest who will talk through in detail about the nuances of buying property in the United States. And I watched a
Hmm.
video of hers the other day. She's incredible, and she breaks it down super, super simple and allows you to understand very quickly the way the world is operating. I can't remember her name right
Hmm.
now, but we'll have her on because she was incredible at breaking down how difficult things work compared to our parents. And
Yeah.
how this is the first time in history that if you're under the age of 30, your earning potential is lower than your parents.
Hmm.
This aging population is having a larger impact on us than we think. And it's not a game of
Yes.
us whinging just because we're younger. It's fact.
Yeah.
Your $100 today is different to $100 50 years ago.
Oh,
And
yeah.
all in all, I think these things, when these moments come around, it's a matter of figuring out and finding the opportunity and the silver lining in the red, red, red headline.
Yeah, absolutely. I mean, the US dollar has lost 99% of its purchasing power since the early 1920s. And 1929, you had the FDR basis where, private citizens weren't allowed to actually hold gold anymore. And then you had what happened with Nixon in the 70s and 80s. And that's a whole different conversation. But essentially, the United States dollar has lost 99% of its purchasing power in the last century. So that should just put things into perspective for you. And what you touched on was a great basis of advice where when the markets are red on the day, just program your brain to think that everything's on sale. It's like a red
Yeah,
markdown
yeah,
item in a store. It really
yeah,
is the way you have to program yourself. And assets or investments are the only vehicles in which you could outpace inflation. So inflation is the deduction in purchasing power of your dollar year over year. So that 100K that's sitting in your bank account when inflation is 6% on the year, it's worth 94,000 in purchasing power the following year. Also, one thing for people to understand is that earned income is the highest taxation bracket. So when you actually go and work for a paycheck and you're on salary basis, that is what you get taxed the highest amount on, up to 55% in some places. If you're in Canada over the border, God be with you, some basis is like 60+%. It's absolutely insane. I don't even know how that's just out of control. But essentially, earned income is the highest taxation bracket. Passive income that you receive from assets, anything that you own from stocks or anything that you own from property, real estate, etc. There is a long-term capital tax and there's a short-term capital tax. So essentially, if you hold it for 12 months or less, you would get taxed at the same rate as your earned income. But if you hold an asset for over 12 months, which is now considered a long-term capital gains tax, you start getting taxed at a reduced rate. So the longer you hold an asset, the less that the tax implication is. 3 years, 5 years, 10 years, 20 years, essentially to the point where the tax could be nil. It could be nothing if you hold it long enough. There's different investment vehicles like Roth IRAs that you could educate yourself on in the States, where essentially you're allowed to invest a certain amount annually, and that should give you an indication for how strong of a vehicle it is if they cap you on what you're allowed to invest because they know the strength of the vehicle. Essentially, you're allowed to invest 7,000 or so annually through a Roth IRA, which is tax-free money when you pull it out after the age of 59. Another very strong vehicle for people to look into, for you to get through the little legal loopholes of where they allow you to just save more of your money. Essentially, the tax code, the United States tax code, is like a dozen or so, 20 some odd pages of how you have to pay your taxes. All the other few thousand plus pages are the legal loopholes in which you're allowed to get away with avoiding that taxation. So it's not what you earn, it's what you keep that's important. And it's very important for people to educate themselves in that regard, because you don't want to just make all that money to have to give it away. And the most important thing you could do for yourself is to start investing at a young age. The difference between someone who starts investing at the age of 21, 22, 23 to someone who starts investing at the age of 31, 32, or 33 is millions of dollars in the long run, legitimately, actually millions of dollars. And the longer that you wait to start investing, essentially the more that you have to invest, obviously, to make up for lost time. So we know that the average investment portfolio starts at 41 years old. If you remove 401ks from employers and whatnot, 60% of the country doesn't even own a single stock or asset. And people wonder why this rat race is omnipresent and just continues to roll over on the day-to-day for a majority of citizens and hardworking individuals who, with just a little bit of education, can really start to open up leeway for themselves. And the last tidbit of advice in that is, the best time to invest was 10 years ago. The second best time is today. Don't worry about having to come in with tens of thousands of dollars. Dollar cost average your way in, basically the same amount every week, every month, whatever it is, and just start small. Start with $10, start with $100, start with $1,000, whatever you could reasonably afford, just to get your footing and open up that pathway for yourself in this space of investing. So you're one step closer to financial freedom.
Yeah, and I think just also, I know we have a bunch of German listeners on nothing that was said then about the States is different in Germany. There's accountants
Yeah.
that can help you with the same structure and the same system.
Yeah.
It's just
Yeah.
terminology is different, but ultimately Germany runs exactly. I know that everyone thinks Germany is this crazy difficult place, and the tax system and code over here is this violently different system. It is in a lot of cases, but ultimately the game stays the same. Try and pay
Yeah.
as
Math
little
is math.
taxes as possible.
Yeah. Absolutely.
it's it's nothing different. And if you go to your accountant and you say, I want to pay as little tax as possible, that is their job, to assist you with that, so they can make as much money as possible. And the differences that sits in between what you pay the accountant and what you pay tax department is what you've made, essentially, if you treat it the right
Yeah.
way. So
Yeah.
I think
I mean,
that's I
people
think that
people get furious with about that stuff. It's very interesting when they see individuals like Bezos and major CEOs of the world who they're like, how did this guy get away with paying no taxes and whatnot? It's because Bezos's listed salary with Amazon is 80 something thousand dollars a year, so that's what he's
yeah.
getting taxed on. His net worth is in the basis of his stock holding of the company, which is to the tune of hundreds of billions of dollars. So these guys take out very low interest loans because of their accreditation. They take out very low interest loans against the assets that they possess. So Bezos goes and gets a $2 billion loan, right, from a bank, private credit, whatever it is that they use, right? And then he essentially sells his assets, his stock ownership that he owns in Amazon, and pays that off as a debt, and it all just becomes a write-off for them. So they don't
Mm.
pay any of those taxes because essentially they're writing down $2 billion, $3 billion that they had to pay off on these private loans that they acquired. And the only thing that they're paying taxes on is the technical earned income of that salary basis, which is like 89 grand. So a lot of people don't understand that or are even aware that that's how the game works.
And I think, in the interest of not becoming a financial podcast, there is a really good book called
Absolutely.
Algebra of Wealth. It's just been
Uh-huh.
released recently in the last couple of months by Scott Galloway. Super, super,
Mm-hmm.
super good book. It's like an evolved, newer version of Rich Dad Poor Dad type vibes.
Mm-hmm. Mm-hmm.
It's
The
just a
classic.
sort of a newer way of doing it with a little bit more relevant topics for
Mm-hmm.
today, I would say.
Mm-hmm.
But it's super, super good. So go read that. Don't listen to two morons on a microphone.
Yeah, no, 100%. And also another great book that I recommend is The Psychology of Money. One of my
Yep,
favorite financial books. Great, great book.
for sure.
Great, great
For
book.
sure.